Welcome back, and joining me with more insight on the day's trade is Jordan Toy from Legacy Family Wealth. Thank you so much for your time, Jordan. There seems to be a scramble in the automotive sector. Of course, now the 2nd of April deadline looms. And we have had announcements that Trump will go ahead with a 25% tariff on automotive players. And now we're having a lot of them trying to figure out if they should localize in the US so that they don't have to deal with the tariffs threats coming out of Europe. Just talk to me about how you're reading this.
So definitely a difficult one to read. I mean, the rhetoric coming out of the Trump camp and what tariffs are on, what tariffs are off is changing hourly, hardly daily anymore. So hard to predict what he's going to do, and I think that that's a dangerous game to try and anticipate what he might be saying. Having said that, he's obviously talked about these tariffs. We'll have to see if there is any sort of walking back. He's kind of pretty much firmly stated that there's going to be no exceptions, etc. So we'll have to see how that pans out. Obviously, the auto stocks across the board getting hurt pretty badly over the last couple of days. I see Tesla's probably less affected and the share price reflecting that. However, it's still I don't think any automaker is going to be completely immune from this, because they're talking about, not just where the car is assembled, but some of the major components that go into it. And I think even Elon Musk mentioned that, some of their components are coming from international sources. So pretty damaging to the auto sector altogether. We'll have to see what it actually ends up being. He's hyped up April the 2nd quite a lot. I mean, I think in the last week we've seen him sort of dull that down a little bit.
Yeah, saying that he's going to be a little bit flexible.
So hard to say where it's actually going to settle. We'll have to see, but he has put a lot of pressure on April 2nd, and we'll see what actually comes out in the wash.
This is quite big, considering that a lot of countries really depend on the automotive industry to boost their economies. We even had Germany, I think the economic minister yesterday, saying that there will be decisive action. So we will see what happens there between that fight. Well, let's get into some of the JSE news that came out today. We did have Capitec coming out with an announcement that Gerrie Fourie, the current CEO, one of the founding members, is leaving, retiring at early in July, or at the AGM in July. Yeah, quite interesting because we also did have earlier on Sun International CEO saying that he's also retiring. But just looking at Capitec, I mean, this is a well-loved stock. We know that it is not considered cheap, and I mean, for a reason, because of its growth story. What are you making of this? Because the markets don't seem to be liking it too much.
So definitely think the big news of the day, it's a great South African success story, right? Yeah. I mean, one that everyone's familiar with. Capitec has grown from, a relatively small player in the banking sector to an absolute behemoth, and expanded outside into other areas of banking. So a really great South African success story. It is obviously, and when I was looking at the share price movements a little earlier today, obviously the market's somewhat disappointed by it. I think that's naturally the reaction, right? He's a founder-led business. I think has always got a lot of positives behind it. Not to take anything away from the incoming CEO, Graham Lee's been there almost as long. He's been there 22 years. He's got a very strong CV. He's been with that management team for some time, so he clearly understands the business. And to be fair, if you look at a business like Shoprite, that's no longer a founder-led business, and also has had great success. So we'll have to see where it goes, but it had to happen eventually, right? Gerrie Fourie couldn't be there forever, so there had to be a transition at some point, and it's going to happen at the AGM.
That's actually a great point that you make, that a lot of these companies that have become leaders in their sectors are not led by the founding members. So really something to keep in mind as the new CEO kind of ushers in a new phase of growth for Capitec. Talking about new phases of growth, we have actually seen that in the telco space. There's actually been great momentum in the share prices of Telkom, MTN and Vodacom for the last few weeks. And Telkom continuing with that, they did release an initial trading statement today. Quite a big increase on a basic earnings per share, 300%, 10% on headline earnings per share. Of course, a few things to take note of there in those differences. But yeah, can you fill in that color for us that they did not fill in the statement?
So the biggest difference between those two is coming from the disposal of SwiftNet, which has been something that's been on the cards for years, right?
Yes.
I suppose it's not news. I mean, this has been talked about for a long time. it's the first time we're sort of seeing the impact, I suppose, on the numbers. So a big injection from the cash sale of SwiftNet. They've obviously removed that from the balance sheet. But pleasingly, if we look at the figures, the headline earnings per share that excludes that, we saw quite pleasingly some growth there as well, outside of this one-off benefit. And yeah, I suppose they keep delivering on they keep talking about the data-driven strategy. We'll see how that goes. You've still got the mobile business there. You've still got OpenServe, which is obviously an immensely large fiber player or provider in the South African market. So yes, I think the market reaction may be largely linked to now we've got conclusion. This has been a deal that's been on the go for a long time, but also, like I said, outside of that, 10% growth in HEPS is commendable.
Amazing. Well, let's take a look at your stock pick for today. What are you choosing?
So nothing new. I would like to talk about Google today, or Alphabet rather, which I think is a very well-known company, obviously, but one that shouldn't be forgotten, right? I think the US is obviously, there's been huge discussions for the last 2 years around valuations, and even with the pullback we've had this year, it is still a relatively expensive stock. But it plays in that growth stock tech sector, so it's largely to be expected. But one I just like, it's got divisions across the board. I mean, the well-known stuff is YouTube, and the advertising potential there is obviously massive, and already huge revenues coming from that. You've got Google Cloud, you've got the exposure to AI, so just a huge business with exposure to all these different areas. And I mean, one thing I like to focus on is, in the early days, or not, well, we're still in the early days of AI, but we talked about AI being a huge risk to Google search. And I mean, I think quite quickly you've seen Google adapt to that, right? They've got their own large language model in Gemini, and Google's just rolled that out. So
I actually love that.
Yeah, and it's actually quite an effective feature. So suddenly, it's an interesting point for me in terms of how a risk appears and can quite quickly disappear.
And can be an opportunity.
Exactly. So Google, I don't think, is going to lose control of the search market in the long term. Certainly competition is picking up in that space, and we'll have to see where that goes. But I think a dominant tech player, and one that's operating in a lot of the right spaces and sectors.
All right. Well, thank you so much for your time and for your analysis on what has moved investors' money today. That was Jordan Toy from Legacy Family Wealth.